Okay, so now it's time for our featured speaker. And I'm not sure if anybody knows that we have a tradition here at the GNA. Does anybody here know what our tradition is at the GNA for our featured speaker?
I saw you do it with Aaron.
You saw me do it on the Aaron Sun video. That means people are watching the videos out there, right? So what's our tradition here at the GNA? Elizabeth, since you're our
They don't
speaker
come up until you announce them, because she came up and you pushed her away.
Well, first things first, we sent our featured speaker all the way to the back, Elizabeth.
Oh,
So Elizabeth, get head all the way to the back. And who can tell me why you think we do that? Why do we send our featured speaker all the way to the back?
So we can clap a long time.
So we can clap a lot of time, that's great. So they can also make that grand entrance. That's right, that's right. Well, before we get started here today, I want to mention that, Elizabeth, this is the very first time she's doing any public speaking on her business. And I really have to give her praise and hats off to her because a lot of you don't know what we used to do at the GNA. We used to run a bunch of weekly events. We used to use the weekly events to put speakers up on stage that weren't as seasoned, had never spoken before, and that they feared the stage. We help people get over their fear of public speaking. So I want to give a big round of applause to Elizabeth for just allowing us to do that. We kind of pushed her into this because we really love her and care for her. So give her a big round of applause. We want to warm you up before you actually come up here. So with that being said, today's featured speaker is Elizabeth Morrison. On Facebook, she's Elizabeth Priest Morrison. And she is a professional bookkeeper and payroll expert and certified QuickBooks Pro advisor. Okay, and I just had something switch off here, which is not good. Here we go. Okay.
See, your iPhone isn't too good, is it?
No, it got a pop-up on there. Okay, here we go. And her presentation topic today is going to be how to manage your debt, reduce credit card interest, and the importance of bookkeeping and why I got into it. Really important, right? So I'm going to read a little bio here on Elizabeth, a couple minutes here, and then we're going to have her charging in here like a raging bull and taking over the stage, right? Okay. Is your business running your life? Tons of paperwork leaving you disorganized and grumpy. If so, Elizabeth has a solution to your dilemma. She has over 15 years of bookkeeping and payroll experience, so relax and leave the bookkeeping to her while you do what you do best, which is what? What do you do best? You're an entrepreneur. What are you supposed to be doing instead of doing this? Running your business! Oh gosh, yeah! Okay, I see who's here tonight. Okay, over the years, Elizabeth has held positions of increasing responsibility, adding to her skills through on-the-job and classroom training. In 1996, she went to work for a CPA where she was able to combine her bookkeeping and office organization skills into one position. In 1999, the CPA decided to concentrate solely on individual tax returns and offered her all of his payroll and bookkeeping clients. That must have been really nice. Kept you busy, didn't it? Right? Okay. They spent several months transitioning the clients, and on January 1st of 2000, wow, the millennium, right? The day where we thought the world was going to shut down, right? Who remembers that, right? It did.
That was
it did, right? We came back from the dead, right? Right, Marshall? Yeah. And started her own business. Okay, here are some of the services Elizabeth offers. Bookkeeping. She offers payroll, and that's pretty much it. I'm not going to go into detail there because I'm going to allow her to do that. So with that being said, I want everyone to please stand up and rise to your feet. Come on now, please stand up and rise to your feet. Get a big warm GNA welcome to Elizabeth Morrison! Let me give you some love because that way you'll feel nice and comfortable. Welcome. It's all yours. I'm out of here.
Okay. Before I start, I've got some handouts. I'm big into paper. I don't know anything about how to do anything on a computer and put it on a screen. And I think I've got it now. So we can just pass them around and there's some. And everything in that I will go over. And if there isn't enough, what I can do is just let me know. I'll make sure you get one. I can email it to you. Can everybody hear me okay?
Yes.
Feels like I'm yelling. Okay. Why I got into it, and it's not exactly what you think. Is that the next one?
Yes.
When I was in high school, most of my friends were talking about boys and everything they wanted to do during the week. But I had my nose in books. I was a big fan of the Civil War, and I loved studying about the battles, what the women wore, the antebellum era, the houses, no electricity, no plumbing. But I especially loved the battles. Watching and reading about how the two armies would come together in various strategic points. And I planned my entire high school career to have very little classes during my senior year in high school. But my guidance counselor had something different in mind. At the beginning of my senior year, he called me and he said, "You're not going to have enough classes to graduate at the rate you're going." And up until then, everything was fine and dandy, no problems. So he called me into his office and he decided that what I needed to do was I had all this free time and I needed to put in 2 classes. 2 of those classes were back-to-back bookkeeping courses. And I didn't know anything about bookkeeping. I didn't know what it was. I thought it had something to do with being a librarian. But what I did was I ended up really liking them. And everything, back then, everything was pencil and paper. And we had these big, long accountant sheets where you had 16 columns and you had to make sure you got the number and the right expense. And I really enjoyed it. I talked to the teacher after class. He was my best friend's father, of all people. So I got to know a little bit of the background information of what I was doing. And we'd all talk about accounting. And she wanted to be an accountant. She ended up getting a CPA license. In 1984, I decided that I wanted to go to college. So I had taken several years off between high school. I didn't know what I wanted to do. I didn't know how to put bookkeeping and history together. But I decided to go back to college. And I worked my way through college, taking 1 or 2 classes a semester. I started off at Cal State Hayward, and I made that commute every day. My favorite classes started at 7 o'clock in the morning. But it was great, because no traffic. I'd get over there, everybody was asleep in class, and I was sitting there with my coffee. Come on, teach me something. Teach me what I don't know. And when I was going to Cal State Hayward, I only went part-time, but I was working for a small CPA firm in Foster City. And that's where I saw how everything fit together from a business point of view, because I was in charge of taking care of 5 or 6 different clients. But what we worked at, we didn't have computers like you have today. What we had were called mainframe computers with terminals attached to them. They were kind of like the dinosaurs, and this is what they looked like. I'll pass that around. It was an all-in-one terminal. It had a monitor and a keyboard all in one unit, and it was attached to this big thing. It looked like that.
You're typing like this.
I know. But they had the cables connected to the mainframe computer, which was housed in a separate area. And the mainframe computer was about the size of this table, but it was about this tall. And it had bells and whistles, and it blinked at me and blinked red, and it made all these funny noises, and it was very noisy. It was very creepy too, because you'd walk in, it looked like R2-D2. But it was really neat, because you think this big thing does all this and keeps track of all these numbers inside it. It took me 10 years to get my degree, because I only work part-time, but I don't have any school debt. I graduated from Cal State University Hayward, which is now called Cal State University East Bay. Nobody likes East Bay. Hayward is a place. East Bay is just a direction. Nobody really liked it. But I've never deviated from my love of bookkeeping. And over the years, I've helped various places of bookkeeping. I've been an assistant bookkeeping manager all the way up to a director of operations for a large home health care and hospice that had offices all over the Bay Area. But what I liked most were the small businesses. 5 people and under was what I liked best, because I liked seeing everybody, knowing everybody, and I don't really care too much for playing politics. But as he said, in the summer of 1999, I found myself working for a small CPA firm in Foster City. And it was just a 2-person office. It was just me and Bill. And what we did was, I pretty much done everything. I've been there for about 5 years. And I got the impression that something was going on. And I couldn't quite put my finger on it, but there was a lot of, Bill was on the phone, and I go into the room and he'd stop talking. And I didn't know what he was talking about. It turns out that he was talking to a lot of the clients. And in the summer of 1999, he approached me and told me that he's going to be getting out of the write-up bookkeeping payroll business. And he wanted to concentrate solely on taxes, partnerships, corporations. And at that time I thought, oh, I'm doomed. What am I going to do? I'm going to look for a job. I like to do so much. But what he ended up doing was he offered me his clients. No charge, lock, stock, and barrel. Take them all. I walked out the door with 6 clients that were mine to use or lose. And not one of them turned me down. I've gotten rid of a few of them over the years as they've gone bankrupt. A few of them I just didn't want to deal with anymore over the course of years. I've kind of outgrown them. And so our target date for the separation was January 1st, 2000. And so I woke up January 1st, 2000, and I started to get ready to go to work because we were going to start tax season. And then I thought, I don't have to go any further than my living room or the coffee pot. It's kind of an interesting thing when you start working in your house because you realize how limited you are. Because it's just me, I'm here all day long. I want to go out and do something. But over the course of time, I got used to it. And because I got into bookkeeping before computers were into existence, I know where all the numbers go when you put them into the system. I know how to trace them through the various places. I know where they need to end up, and I know what's going on in the computer behind the scenes. A lot of people these days don't know what happens to it. Some people think all you do is push a button. I said, okay, tell me what button to push. Tell me what sequence to push them in. But I started off there, and in 2005, I had found out that the DOS-based software that I used to use called ACPAC was being discontinued.
DOS-based.
DOS-based. It's what you call WYSIWYG. What you see is what you get. It was being discontinued. They were discontinuing the bookkeeping and the payroll modules. So what I did was I was on the lookout for another software. And I've been hearing about QuickBooks. I talked to CPAs. CPAs love it. You can send the QuickBooks right to their file. Most CPAs use it. They said it was easy to learn, which it wasn't. And so in the end of 2005, I started converting all my clients into QuickBooks. And I did not like it when I first started. I thought it was difficult, I couldn't figure it out. The first time I had to do a payroll on it, I thought, oh, okay, it's all set up, I've got the payroll done. No problem. I couldn't figure out how to print. I deleted the payroll and put it in again. Couldn't figure out how to print the print button here. So I got mad and I threw my papers out. And a little sticky note happened to stick right there, and I went to get the sticky note, and I saw I got to scroll down. So you scroll down about a half a page, and there's print. So I figured that one out, and I started thinking about that time. I said, what else don't I know? Everything I've done with QuickBooks is what I do over and over again. So in 2009, through various LinkedIn programs, I heard about a program sponsored by Intuit called the Pro Advisor Program. And what that is I get any kind of software I need to do work on any client, and I can get certified in it. And through the certification programs, I learn everything I need to know how to run that program. That program makes sure I know more about QuickBooks than anybody else. And what happens also is through the program you get advanced issues of QuickBooks. Like I just finished studying all about QuickBooks 2014. I was working on 2014 in the summer before it even hit the stand. So as soon as it comes out, I knew everything there was about it. I'm currently certified in QuickBooks 2011, 2012, and 2013. I'll get 2014 as soon as it gets into the program. And I'm also interested in learning new types of software. And one of those little handouts is Xero. That's supposed to be the up and coming software. It's a subscription-based software. And so that's one of the next things I learned, because I want to be able to give my clients more opportunities. If they don't want QuickBooks, they can learn that. Okay, managing debt and reducing credit card interest. Have you noticed that more and more companies are requiring you to purchase by credit card just to do internet purchases? And they penalize you if you don't? Because what they usually end up doing is if you don't purchase on the internet, you can send them a check, but it'll take 4 or 5 weeks to get you something. So what they want you to do is pay by credit card so you can have, instant access to your firewall or antivirus. And you can even pay your taxes on the internet. This is the most recent handout I got from the Employment Development Department for Payroll. It says, use your credit card to make a payment. These places know that if you pay by credit card, you're likely to pay a lot more because you're not paying attention to what you're buying and you're not paying attention to what things cost. If you have $100 in cash in your pocket, you're limited to that, and when the money runs out, you can't buy anything else. But if you have a $12,000 of available credit on a credit card, people know that you're going to be spending a lot more. And people have done studies on this, that if they play certain music, not this, if they play certain music, you're more inclined to buy more. And then suddenly you get the bill after you've done all your purchases. And you're shocked because you can't pay it. So what happens is you make the minimum payment, you're continually using your credit card, and next month, same thing. You make the minimum payment, and the situation goes on. And then when you've maxed out one credit card, you have another credit card, you start charging on that, and you make the minimum payment. And then soon, before you could understand what happened, you got into debt. My definition of debt is a symbol of your past run amok. There are 3 basic steps to managing debt. Determining where you are, where would you like to be, and having a plan to get there. The first step is, where are you? And in order to understand where you are, you have to know what your normal monthly expenses are. And the best way to do that is open your mail every day. It's simple, but a lot of people don't do it. They get into debt, they're scared of their mail, their credit cards come, they don't hide them. Husband or wife hides them in a drawer. Nobody wants to see them. And I can't tell you how many times I've gone to pick up clients working unopened bank statements, unopened credit cards, unopened invoices. And I even found an unopened check that he was waiting for. I called him up and said, you know that check? I got it. I mean, he couldn't figure out how I got it. He did. And I said, well, it's in the envelope you gave me. The next thing is to keep track of all your expenses for a month. Know where your money comes from and know where it goes. And also get receipts. And when you get a receipt, look at the receipt. Because stores don't, when stores put something on a receipt, it could just be an item number because it's based on their point of service sale. So if I have a receipt in my hand and it says item number XJK201, and I look at the date, it's 2 months in the past, am I going to remember I bought a stapler? But if you want to, just write on the receipt what it is. Don't write over the item number. And also note if your expenses are monthly, quarterly, or annual. Because if you have your monthly expense sheet, but say your auto insurance is semi-annual, you'll need to know that in 6 months you're going to be getting a bill for it. And you want to know, okay, in 6 months I'm going to be able to pay for it. And after 1 month, look at all your expenses and compare it to your income. Because this will give you a good idea of what it takes for you to live your life each month. And what I did was also, in your packet is a monthly income and expense sheet. Just all you got to do is fill in the blanks. And by the time you get to this bottom line, you'll know exactly where you are. A lot of people, the first time they fill this out, they think, what? It's a negative. I said, well, you spent too much. And after you know where you are, this sheet will tell you where you are at this point in time. And after you know where you are, the next step is you have to have a plan to get there. And the plan to get there. And there are several ways to reduce your debt. You could reduce your expenses, you could reduce the interest on your credit cards, or you could transfer balances to a lower interest credit card. Now, to reduce your expenses, the best example I have was with a client that I worked with earlier this year. It's what I call getting creative. And what he did for the longest time, he didn't want to track his cash expenses. And I know that a lot of his business was done in cash, but his sales were very different than what the money that actually went to the bank. And I thought he was taking money from the bank, from his cash sales. I didn't know what he was doing with it. And he said that, well, I'm using it as expenses. I'm taking clients here, I'm going there. But there's no receipts, no documentation, so I couldn't track it anywhere. And it's not something that I could send to a CPA. So he finally caved in and decided to track his expenses for a month. And he documented every penny. 2 weeks later, he calls me. He's on the phone. He said, Elizabeth, you're not going to believe what I got. And I couldn't understand what he said, but I heard Starbucks and I heard $250. He had spent $250 in Starbucks over a 2-week period taking potential clients to coffee.
Wow.
Yeah, I know. He does better than a lot of people I know.
He lives there more than I do.
I guess he lived there. And so this is where his cash was going, but at the other part of the problem, I thought there was something very odd going on. If he's spending all this money on potential clients, it should show up in his sales someplace. It should show up as more income, but it wasn't. What it ends up, after talking to him, I went with him to one of his Starbucks events, watched him. I didn't sit with him, but I watched, there was no connection between him and his customers. He couldn't talk to them. They'd walk away and wonder what he did. So, I came up with a better plan. And he and I came up with it, but it was my idea. So, I know a lady whose name is Rosie Zapata. She has a company called Compelling Conversations. And I heard her speak at a networking group, I think it was last March or April. And that was about the time I was trying to figure out with him what we were going to do about this problem. I knew he can't talk to these people, so taking what she says, he just couldn't do it. So what I did was I took her idea of spending and I flipped it over to work with his strengths. And I decided to put my own spin on it, and I told him, I said, try this, let's see what happens. So the first thing he did was he stopped taking clients out to Starbucks. He invited them to his office. He served them coffee, tea, cocoa, small luncheon, whatever. He took them to his office, took them around his store, showed him his process, showed him how he does things, introduced him to his employee. He was able to communicate more with his clients and customers because they had a really good view of what he did. The effect was immediate. The first time he took someone out, he closed a sale and they even left a deposit. We got creative. So now it's your turn. Using the same example as you look at your sheet, if you do this at home, where can you get creative and what can you cut out? How can you put a different spin on things than what you're doing? And I've got some examples. If you're an employee and you get a tax refund, you can change your withholding. You can take a look at your last year's final check stub and determine how much taxes need to be, and you can tell your company, take out this amount for federal, take out this amount for state. But it's only if you're getting a significant refund. There's no sense in giving the government free money. Another one is to consolidate similar activities. Instead of going out to the library, coming home, going shopping, going home, going to a restaurant, going home, take care of everything all at once. And another one is to be aware of prices in stores of the 20 items you buy the most. And one that I tracked about a year ago, and it's still on the same one, is Maxwell House Coffee. This item is on a 13-week rotating cycle for all of the stores. That means in one part of the 13 weeks, it's going to be its lowest price. And the lowest price is currently $6.99. And then at another part of the 13 weeks, it's going to be at its highest price of $14.99. And another one is look at your insurance policies and see if you're charged a monthly service fee. So I have a friend named Karen who has a Harley, and she used to pay an additional $20 each month for the benefit of making monthly payments. So what she ended up doing was she saved herself the $20 each month and paid off the whole thing at once, and she saves herself $120 each year. Now, if any of you are parents and you're saving for your child's education at the expense of your own, I suggest you don't. People argue with me, and if they want to argue, that's fine. They're the ones that are in debt. Because sacrificing your future for their education won't help you a bit. They have a lot longer to go to retirement than you do. Now, if you want to reduce your interest on credit cards, the first thing you need to know is there's two types of debt. There's secured and unsecured. Secured debt, examples of these are like houses and cars, because they're secured by something. You own a car, it's secured to this loan. Unsecured debts aren't tied to anything. Now, the first thing you need to do when reducing credit card interest is you've got to know where you are. And so I suggest you make a list of all of your credit cards. And here's a sample list that I gave you. It's at the bottom of monthly bills. And I suggest you make a list like this so that you can see everything. You can see the due date, the payment, the interest, balance available. And I also want you to see the credit limit because you'll need that in the next step. And what you want to do is you want to use this list and call these companies and ask if you can get the credit card interest reduced. And if I was looking at this list, the only one that I would probably end up calling is Capital One, because 8.2% interest is a little out there compared to 7.9% of Visa and 10.24% of MasterCard. And what you want to do is when you call that credit card company, when you call Capital One, you have to have an ammunition card with you. And the ammunition card is the one that you're going to call Capital One and you're going to tell them, I have this credit card. It has 7.9% interest. You're charging me 18.2. I'd like you to reduce it. But you don't need to tell them what the credit card is. I never. And after you talk to them, document it. Document who you talk to, document the date and time. If you were moved to a manager, chances are you will be moved to a manager because the people at the bottom don't do that anymore. They aren't allowed to decrease the credit card interest rates. Normally in this economy, it used to be credit cards, when I called them, I got a 5% drop in interest right off the bat. Now, I'm lucky if I see a 1 to 2% drop. But it doesn't hurt to try. And after you talk to them, ask when the new rate takes effect. Because the new rate might take effect at the beginning of the next billing cycle, but that billing cycle will be 2 parts in the future by the time you see it. Because you're in the middle of one billing cycle, the next billing cycle will start with the new interest, and then you'll have to wait for that other credit card. Okay, transferring credit card balances and balance transfer notices. Because after you've determined which credit cards, you've called them all, you've dropped them to whatever level they're going to be at. You've reduced all the interest and you still need to further reduce your credit card debt, there's still more you can do. As you look at the list of credit card companies, I had you write the available credit and the limit and the balance on here, because you could choose one that has a low interest that has a available enough credit. And the Visa card is the one that I would start transferring a lot more to, because you have a credit limit of $12,000, but you only have a balance of $23.70. And you always want to transfer 10 minutes?
Yes.
Oh, God.
Okay, will you right?
Okay, you always want to transfer amounts from a higher credit card interest to a low credit card. Now, if you happen to have a balance transfer notice, they're not junk, but in the hands of someone who doesn't know what to do, they can be pretty detrimental to your credit. You always want to read the fine print, and I had to learn the hard way what not to do with them. Pre-approval notices work best when you can transfer an amount onto a zero-interest credit card. And it's because of a concept called tiered interest. And that's where if you look at your credit card on the second page, you'll see several different credit percentages and maybe balances attached to them. You'll see that your credit card is on tiered interest. So if you transfer an amount, say I have $1,000, I'm going to transfer that 0% onto my Visa card at 7.9%. What it's going to do, what you don't see and what credit card companies don't want you to know, is it pays off the 0% interest first, which doesn't help you. Your 7.9% is going to grow. And a lot of credit card companies don't want you to tell that, don't want you to know that. And I found out by hand, by accident, when I did that. I go, well, wait a minute, this is 0%, but the 0% is paid off first. Okay, the 2 ways to reduce payment on credit cards, one way is to reduce the largest credit card bill first. Some people are motivated when they see this large interest credit card bill going down. But more people are noticed when you pay off the smaller credit card, because when you pay off the smaller, when you see it disappearing, and when it goes away, you can pay off another one that's next in line, but whatever you do, make sure you pay off, make sure you make at least the minimum payment on all the other credit cards. And after you've paid one off, take the amount that you would have paid on that credit card and apply it to the payment of the next credit card in line. So, how important important is bookkeeping? Managing debt and reducing credit card interest is just one part of a good bookkeeping system. Another part is cash management. So imagine you have this brilliant idea, you have a perfect product, you found a nice location, everybody wants it. Everybody's coming to your business, they stand in line. They stand in line waiting for your doors to open. You're a success. But if you haven't kept track of your finances, you could find yourself in some serious problems. Because the basis of a bookkeeping system that I designed is called number knowledge. As a business owner, there are some things that you should be aware of. Do you know immediately if I ask, what are your expenses and how do you track them? If I call and I tell you that you owe me money, can you verify that you do or don't? How much money are you bringing in? Do your customers pay by check, credit card, debit card, or cash? Who owes you money and are you collecting it? Do you deposit all the money that's coming into your store? Or do you maintain your books? It's the number one cause of most bookkeeping mistakes is exhaustion. It's 11 o'clock at night, you're going to tackle this mound of paperwork, you're tired, exhausted, frustrating, drunk. I've seen it.
Oh, yeah.
Following is a list of errors I have discovered on clients' books because of exhaustion. A check was issued for $10,000 instead of $100,000.
Oh.
And it clears the bank. Some people forget that cities within counties have a different sales tax rate than the county. San Mateo, the city of San Mateo has a sales tax rate of 9.25. The county of San Mateo is 9.0%. If you charge, say I'm a big customer and I get charged 9% on a huge purchase. I'm in San Mateo City. The person charges me 9%. I make money because I'm not paying them. The person that's charging it loses money because they're only collecting the 9%, but they have to pay the 9.5% to the State Board of Equalization. 9.25%. That extra 1/4% is lost money because sales tax is not something you keep. It flows from you. You're kind of like the middleman. It flows from your customer to you, to the Board of Equalization. I've also seen clients pay bills from wrong accounts on the bank's bill pay system. Instead of paying it from their checking account, they'll pay it from their savings. Their savings had no money. He did that 10 times. Didn't realize what he was doing. I've seen receipts stuffed in every pocket, cubby hole, box, all over the floor, in the shredder, and clients have forgot where they were. One client found most of his receipts. He put them in a box, a big moving box about this big. Took it to my friend who's a CPA. And said, "Here, Don. Here's your stuff." The CPA put him on extension, gave him my business card, and said, "Call me." That's how I got one of my clients. This is a sad one. He was getting his stuff organized for his tax accountant. He accidentally shredded all of his receipts under $75. Every single receipt. He thinks he might have had about 60 of them. Now, if you saw yourself in any of this, or maybe you have your own examples, I have a couple of ideas that might help you. Make a list of what is due and when it is due. And it's also on them. It's on the top here. This is my list. Of course, it's not complete. It's just one that I have. I have all my lists here. What's really good about this is I got it from one of my clients. I saw what he did, and I thought it was just the most awesome thing. He says, I look at it. My Comcast bill is due on the 21st. If I don't receive it on the 15th, I'll know it. And since I've used this form that my client had, I have never missed a credit card. Sometimes they don't come in the mail. I've had non-payments, and I went to see them. I didn't get the credit card. Never since I've used this have I ever missed a payment. And I shouldn't miss payments. I'm a bookkeeper. And another thing to make it easier is put all your bills in one place. Don't have a bill to pay here, a bill to pay here, a bill to pay here, and when you go to pay them, you can't figure out where they are. Put them all in one place and take a look at them every weekend. Every weekend is when I do it. I take care of everything. I pay all my bills, I reconcile all my bank statements. Some weekends I don't have anything to do. But if I have something to do, if I have something that needs to be paid, they all get paid. I use my bank's bill pay system, put it in the computer, pay them whenever they're due. And you want to establish a rhythm for bookkeeping. Because there's nothing worse. An accountant does not like to see books put together when you're in a caffeine rush the week before taxes are due. But the best thing you could do is handle it little by little. If you're like a lot of people I know, bookkeeping is not your thing, work on it for a half hour every day. A little bit each day. Reconcile your bank accounts every month, because that way you're going to know what's in your bank account. But the number one cause of not reconciling is the number one result of not reconciling is a client they forgot a check. Their wife wrote a check, she forgot to put it in the system. He didn't reconcile his books for 6 or 7 months. Suddenly that one check comes back. Have an adequate amount of cash put aside for disasters. Because if we're in California and we have earthquakes, and if we have earthquakes, you can't use a credit card and phones aren't going to work. And the only thing you're going to have is cash. So have some cash set aside for anything. And keep all original itemized receipts. If you're a business owner, the IRS needs to see these original itemized receipts. As under Section 162 of the Internal Revenue Service Code, trade or business expense, the taxpayer must prove both. 1, that the expense was ordinary and necessary, and 2, that the expense was made. Now, anybody knows that the expense was made. You can show it in your credit card statement, your checkbook. But what you need to do is you need to prove that you had the expense. And the best way to do that is to keep your documented receipt. And if you pay by credit card, you could compare it to the credit card, make sure the credit card puts it the right amount. But what a lot of people do is after they compare it to, say, paper, they toss the receipt. And a lot of people I know are getting audited and they're having trouble coming up with the receipts. Because they say, well, I've got my credit card statement, but that's not going to prove it. The IRS has started disallowing those deductions. And if you want to, some people like to keep track of their expenses on Quicken. There's also QuickBooks. There's a new software that I'm getting used to. I'm testing it on my own. It's called the Money March account by You First Bank. And what that does is it gives you a specific date and time where you will be debt-free by putting everything into the system. And it will tell you exactly when you will be debt-free. And it gives you all the pointers of everything you have to do. You have to do this and this and this and this. The only problem is I like to pay for things. So I decided, I said, well, what if I take out $1 million loan based on my income? And I froze up the program. And then it comes, these big words appear on the front of it, says declare bankruptcy.
Yeah.
Yeah, the easy way out, right?
I guess.
The traditional American way, right?
I like playing with things and seeing how they work. And I hope that you've kind of enjoyed my stories about all my clients and some of the funny things they've come with. And if you guys ever need help with your credit cards, I could walk you through. I could sit with you if you wanted to call and get the interest reduced. Did you have any questions?
What about your services, Elizabeth? What are your rates for your services, for each of your services? And how do we contact you if we need your services? Is it in the packet or?
It's blue. It's on back of the blue one. I had attached it.
And your rates are?
What my rates are pretty much anything I want. My rates aren't very high. I usually bill out about between $25 and $35 per hour. If it's cleanup work, where somebody has gotten their hands into your books and made a mess of everything, and I have to go back for several years, my rates are $75 an hour. Because cleanup work is a mess. It's hard to do. It's horrible. And what I do is I also have payment plans. I do payroll, bookkeeping. I have various packages that I put together. I don't have them with me at the moment. Are there any other questions?
I just want to make a comment. I really appreciate your talk. It's really nice to get to know you, that I can see you, but not really knowing what you do, except that you're a bookkeeper. I can see you really are a master at this. And I want to say that it's hard to do it by yourself, and that's why I pay somebody to help me. One thing I do for sure is, and it's emotionally hard, but I do it because I want to know where my money is. I take what you just gave, and I have my categories horizontally. Vertically is the days of the month, and this is what I plan to spend in each of the categories. And I write down when I spend money, and then I add it up. And I see what I do, and when I spend too much money, let's say at Starbucks or out, I go, okay, then I can either decrease the spending in that category, or I can take it from my personal care. I have a choice. But if I don't have clarity and write it down, I don't know anything. And it's empowering, because I'll tell you, I used to feel guilty for getting my nails done, getting my hair done. But when I plan to spend $300 or $200 a month on personal care and it's planned, I don't feel guilty. I feel I deserve it because I planned it. So I really appreciate what you said, and I definitely will be taking your card, and if I think you're call.
Okay, thank you. I'm glad I helped with you.
Yeah.
I've already saved all my receipts, and recently installed a scanning system. And it has an idea of a PDA or PDF-A or PDF-B, and one of those cannot be changed. And then it's okay with the IRS if you scan in that format.
So some of them you can do that. That's an also acceptable one. I prefer to have the original receipt. And you can scan it into a PDF format too.
Just I'm trying to get rid of paper.
So I also included in that is a list of what to keep and when to keep
I
it.
did see that.
And how long to keep it. It's just a guideline.
So much paper.
But right now the IRS is auditing 2010, and I know for a fact because I'm walking one of my clients through it right now. I'm working with the CPA. They can go back 3 years and audit 2008 and 9 as well if they find anything.
Kept it on, but I mean, at some point I should just scanning that and stop carrying that paper around.
I don't mind paper. I like paper.
I actually like it, but I get.
There's tons of it around.
And we're out of time, unfortunately. We've gone over. So everybody give Elizabeth a big round of applause. Wasn't that awesome? Elizabeth, that was great. Wasn't that simple, Elizabeth? Elizabeth, the post-game interview here.
What?
Wasn't that simple for your first time speaking publicly?
I'm glad it's over.
Another round of applause for Elizabeth, everybody. Yeah.